Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness. And now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified. And that's actually bullish for tech.
Because the CPI was, you know, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5% after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
Nvidia, a name synonymous with groundbreaking innovations in graphics processing units, is not just competing, it's vying for the ultimate title. With a market cap surpassing $3.4 trillion, there's a palpable buzz about its potential to outpace Apple for the world's largest company accolade. Speculation swirls around its futuristic advancements and stellar growth trajectories, ushering in a wave of intrigue and excitement. Could Nvidia, riding on the wings of its next-gen Blackwell architecture and increased demand from tech giants like Meta and Amazon, achieve a staggering $5 trillion market cap by 2025? Stay tuned as we delve into this exhilarating race to the top. Welcome back, everyone, to Investocracy.
You saw it in Bitcoin.
Correct.
And you saw it in sectors of the market that would benefit from
That's right.
Presumably, but who knows from a Trump presidency. So 1,500 points out of the gate. More to come, or are we're already there?
I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a...
So what do you think that should be? 12 times? I mean, what's the opportunity set in your mind?
Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking about the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market is, everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that it's not yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
I thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe the sweep the other way would have been a little more frightening to some.
Yeah. I mean, I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And so in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I mean, I kind of agree with the idea that there are animal spirits growing.
He'll never be deficit friendly, will he? I mean, he will be deficit friendly. He won't be, if we cut taxes on tips, Social Security, overtime, remove the SALT cap, extend the tax cuts. If you do all those things, that seems like...
It's going to be very difficult to fix the deficit with just changes in taxes and spending. But it's probably why Bitcoin is kind of interesting here, because it's potentially a Treasury reserve asset. And, if Bitcoin rises in price, it actually helps offset the liabilities, which is the deficit.
The heart of Nvidia's momentum lies in its remarkable financial and technological feats. From 2023, Nvidia's revenue exemplified a jaw-dropping leap of 320%, while its profits shot up an astronomical 1,340%. Such figures are rarely seen, yet Nvidia achieves them with an air of inevitability. Its stock price has soared by 600% since 2023, making investors' eyebrows rise and turning casual observers into firm believers. As history tells us, stock price and profit growth often move hand in hand, like two dancers in an intricate waltz. So, when was the last time you saw a tech company doing a moonwalk at the financial ball? Perhaps the answer lies in Nvidia, as it continues to impress with these dance moves into 2025. But what's the secret sauce behind these staggering numbers? Let's talk tech.
Not necessarily by the end of this year, or?
I think six figures is still possible for it before the end of the year, yeah.
And then more next year and the year after?
Yeah, I think because now, post-halving and now Bitcoin's becoming a lot more relevant, and I think maybe the regulatory overhang is diminishing, that there's a lot of upside from here, yes.
Okay, S&P, end of next year.
Well, between now and year-end, 5 to 10% is probably the base case, just because that's the type of rally post-election, and we have a dovish Fed and, the normal seasonals.
Is that the right move right now for the Fed?
I think inflation fighting war is largely over, and the real rate is still too high. So I agree with Fed's view that we need to move towards neutral, which is towards 3%. So I think it is supportive of markets, and business investment has been constrained. So I think these things are positive.
So what about 2000, what's next year? Is that 25? They move so fast. They're like months now, the years. So what about 2025? So 5 to 10% more would put us well above.
Yeah, more than 6,000 before year end. I think at least for the foreseeable future.
No recession.
No recession, and
people want you to answer when I ask you a question. So what are you saying? 60, what hundred on the S&P?
I think well past like 6,700.
No,
sometime next
6,700.
year. Yeah, sometime next year because
that's another 20%, isn't it?
Yeah, maybe 10, 15. Yeah, because margin debt hasn't really risen in the last 4 months, and the stock market's up. So we know investors haven't been adding risk. And now we have earnings visibility, and we have a continued dovish Fed, and then this election's behind us, so multiple tailwinds exist.
Wow. You're pretty bullish.
I think I'm pretty positive on the U.S. and fundamentals, yes.
Okay, good.
NVIDIA's supremacy isn't just a flash in the pan. Its Hopper architecture currently leads the GPU manufacturing domain, but enter Blackwell, the next-gen architecture promising to revolutionize AI model training with a 4-fold speed increase over its predecessor. This advance has tech behemoth eagerly lined up, ready to integrate Blackwell's power into their AI initiatives. Among these giants, Meta Platforms hints at ramped-up capital expenditures for building an AI computing network, likely relying heavily on NVIDIA's prowess. The plot thickens as Microsoft, Amazon, and Alphabet, all major players in cloud computing, also express a growing demand for AI computing power, further tethering their fortunes to NVIDIA. If excitement had a measurable form, it's found here, sprinkled with a dash of envy for competitors. Wall Street analysts are keeping their calculators handy, projecting 51% revenue and a 50% EPS growth for NVIDIA. But there's a notable caveat. The stock's premium will likely rise from 45 times forward earnings, an indicator of potential slowing growth. Yet, with its robust business model, NVIDIA seemingly ticks every box for promising returns, offering a captivating proposition for those ready to ride the next wave. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I was speaking with the founder of a tech company that is absolutely foundational to the generative AI era, if you will, and thus an early indicator of what's happening in the market. And this person said to me that they think that we are much closer to being oversaturated and oversupplied in NVIDIA chips than anybody realizes. Your thoughts?
Well, it doesn't seem that way right now. I mean, some of their older generation parts, like the Hopper parts, supply's gotten a lot better as we've gone through the year. The Blackwell parts that they're getting ready to launch now seem absolutely constrained, right? Now there is a lot of capacity that is coming online as we go through the year. And this is why people get positive about NVIDIA, because if the demand is there to meet that supply as it comes online, it still suggests a good amount of upside relative to where I think expectations and numbers are. So that will be the debate, again, as we go through 2025, as that supply comes online, is the demand there to meet it or not? I would say as we stand right now, the demand still looks off the charts. At least at this point, like, all these guys are going to be selling everything that they can make.
Peering into the crystal ball of tech stock futures, NVIDIA shines as a beacon of potential wealth and innovation. As the horizon of 2025 comes into view, a $5 trillion market cap is not just a fantasy, it's a tangible possibility, contingent upon continued demand and performance. The growth trajectory mirrors a well-calculated chess game where NVIDIA seems poised, confident, and strategically ahead. With Wall Street analysts painting a dynamically expanding canvas, it's evident why NVIDIA is heralded as a strong buy. In the symphony of stock market speculation and calculated investment, NVIDIA plays a leading role, inviting scrutiny, investment, and perhaps even a little friendly rivalry with Apple. Let's now turn the floor to you. Are you betting on NVIDIA reaching that illustrious $5 trillion mark? Or do you foresee challenges lurking ahead? Your insights could be just as pivotal as the next tectonic shift in the stock market landscape. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.